Good afternoon and welcome to Prime Interest. I'm Perry Ann Boring here in Washington, D.C. and here's the stories that I've been tracking today. We are now versed in everything Bitcoins. Although you can't touch the digital cryptocurrency, producer Bob English and I flew out to San Jose over the weekend and reached out to the 1,100 attendees and sponsors for the first major Bitcoin conference. We have several interviews from Bitcoin millionaires, investors, and developers that we'll be sharing over the next few weeks. Today, we're going to feature the CEO of BitInstant, Charlie Shrem, who will explain just how easy it is to buy Bitcoins. But moving on, those who are facing foreclosure by Wells Fargo and Citigroup might be able to breathe a little sigh of relief. The two bank giants have halted most of their foreclosure sales in several states. This is after the Federal Reserve and the Office of the Comptroller of the Currency issue new guidelines. Will this jam the housing inventory pipeline once again? We're going to discuss this and more with Mike Richardson. He's a contributor to The Motley Fool. And tomorrow's the big day at JP Morgan that will decide whether or not Jamie Dimon will be stripped of his chairmanship. But some shareholders are crying foul and have called on the Security and Exchange Commission to intervene. This is after a company called Broadridge, which is supposed to provide updates on shareholder votes, suddenly stopped reporting this information on Friday. And finally, Apple CEO Tim Cook goes to Washington tomorrow to testify over taxes. Did they pay too little? Are they gaming the system? Cook will present his own plan to Congress that will have repercussions throughout the Fortune 500 universe. I'm going to be at the hearing and I'll bring back a full report tomorrow. But for today, let's get to what's in your prime interest. The first major Bitcoin conference took place last weekend in San Jose, California. Prime Interest producer Bob English and I, we were there and we had the chance to interact with a wide selection of attendees, from CEOs to techies and to just simply Bitcoin enthusiasts. Over the next few weeks, we're going to feature these interviews. We have interviews from the top execs at CoinLab, TradeHill, ZipZap, Monetos, RunToGold.com, and OpenCoin, which is developing the somewhat controversial Ripple currency and payment system. Now today we're going to feature one of the youngest CEOs at the conference. He's one of the most successful though. His name's Charlie Shrem, and he is the co-founder and CEO of BitInstant, which provides retail access to Bitcoins as a registered money transfer agent. He's 23 years old and he wears a ring with his Bitcoin wallet on it. They call him Four Finger Charlie because if you chopped it off, you could get all his money. The first question I asked Charlie was just to provide a little bit of background on what BitInstant is and what it does, and here's his comments.
BitInstant is the company that allows anyone to buy Bitcoin locally. So if you have a 7-Eleven, a Walmart, a CVS, Duane Reade, at your local location, you can go into these places and actually buy Bitcoin, up to $2,000 worth every day. At the same time, if you have Bitcoin and you need for some reason to transfer it back into dollars or any currency, we can put money into your bank account within 30 minutes. So we're servicing the under $10,000 customer, where most people who are buying Bitcoin think that they need to go to these large exchanges and open up accounts and put trading orders in. You don't need to do that. When you go to Europe and you buy euros, you're either using your ATM card or you're going to one of these Travelex or change places to do that. And that's what BitInstant is poised to be.
And how widespread is BitInstant?
In the U.S., we're in 700,000 locations, but globally, we're in 11 different countries. So you can buy Bitcoin at any post office or bank in Brazil, any airport or bank in Russia. We're in the Caribbean islands, we're in Ukraine, we're in most of the Eastern European countries, and we are going to be in Australia and the UK by the end of the month. And
you also just have very exciting news that you're releasing. The Winklevoss Capital has funded you a very large sum of money. I think it was at $1.5 million.
Yep, Cameron and Tyler are great guys. I met them in Ibiza, actually, gave them my lounge chair, and that's how it all got started. one of our first investors, David Azar, was there as well, and he kind of pitched them on this whole thing where he's been in the money service business for over 10 years. So he's like a veteran of the banking world. And he came and said, wow, this Bitcoin thing is really going to overturn the whole financial infrastructure. And he pitched them on it, and he introduced them to me. They're like, yeah, you have to meet this Charlie guy, board genius, blah, blah, blah. And we all met, and it was love at first sight. We all got together and started building the company. They actually invested, I would say like 6 months ago. We just recently announced it. We wanted to make sure that everything was good and that we had all our ducks in a row. At the time, I was running the company out of my basement. We had 3 employees. It was a joke. And they picked me up and they said, Charlie, you have to make this thing. Now we're 16 employees, 16 team members. We're going to be 18 people by the end of the month. We're moving to a new Soho office as well in a few weeks. We have finally money transmitter licensing in over 30 states. And federal license as well with FinCEN. So we're really pushed a lot and did really good things.
And can you also speak about the regulatory environment that you're entering? I know you have to be licensed in every state in order to do business in them. Can you just talk about the challenges that you're facing?
Yeah, the regulatory environment, take Bitcoin out of the picture, the financial industry in the United States is probably the most regulated industry in the world. It's crazy.
And subsidized.
There are only like 20 companies that actually have licensing in all 50 states.
And you receive no federal support, help in any way, shape, or form.
No, they're throwing me under the bus. They don't like us.
And you're the little guy.
And I'm the little guy. And I'm super young, so it's like, who's this kid? Yeah, exactly. So you come out and you say like, we want this Bitcoin thing to overturn everything. But at the same time, we have to be compliant, and you have to know your customer. You have to know every single customer, no matter what, even if they're transferring $1 or $1,000.
And how reasonable is that?
It's not that difficult if you do it the right way, because money laundering in the outset treats you like a criminal, and that's not fair. The term money laundering was invented by banks, and knowing your customer shouldn't be this complicated, expensive thing, and you shouldn't treat everyone like a criminal in the beginning. If you come to a customer and you say, hey, look, if you trust us, we'll trust you. You don't want to give us your social security number? Fine, we can't let you transfer more than $500. If you want us to check a certain amount of databases, that's okay too. And that's what we're trying to do. We're trying to change that whole and overturn it from treating you like a criminal to scratch my back, I scratch yours.
You don't actually meet your customers though, because this is all done
over the internet. Yep. You can go to our website, you can actually hold up your ID to the webcam, and we'll scan it and we'll check all the databases and we can verify it within a few seconds. When you go to one of our locations, you can just show ID to the check, to the cashier, to the teller. So it's still extremely private, but it's not anonymous. You're getting your Bitcoins, you have this privacy. BitInstant is retaining your information. We're not sharing with anyone, but at the same time, we have legal and regulatory obligations that we have to meet, but we're not excessive. We're not overstepping our boundaries here, and that's really important because people want their privacy. When you go and you buy a piece of gum at 7-Eleven, you're using cash because it's private. Not everyone's going to see the transaction, but when you're using your credit card, every single person and their mother saw what you pay on your credit card.
They can trace you.
And trace you. Every government agency, anyone. It's so easy to get a warrant for anyone to see your credit card statement. And that's why people use cash. So what is Bitcoin? Bitcoin is cash with wings. It's the ability to be able to take a local transaction and do it globally. And that's why Bitcoin is going to overturn the financial infrastructure. It's not only, I would say, a global monetary revolution, but it's an evolution. It's the evolution of money. It's the next step. It's the next... Bitcoin is like the largest socio-economic experiment the world has ever seen. You're talking about millions of people around the world who are saying this data is worth value to us. And it has not only just like Fuse and all these different types of Amazon coins. They're not just companies that say this is worth valuable. This is something that has an underlying financial global payment infrastructure that is what gives it its value. Like, why is gold valuable? Gold is valuable because it has intrinsic value. You have you can make jewelry out of it.
Is anybody trading Bitcoins for gold or silver?
Of course. You have companies like Coinable.com, and you can go gold to Bitcoin, Bitcoin to gold. There are a lot of different companies that do that, and you can bypass dollars totally, and you're saving a lot of money on wire transfer costs. And if you have Bitcoins and you buy gold or silver with it, it actually saves you about 5% if you use dollars or your credit card or send than a wire transfer because there's no markup. Bitcoin cuts out every middleman. Right. When you use a credit card transaction, there are 4 middlemen involved in that. You have the issuing bank, the merchant bank, the payment gateway, and the payment processor. All need to take a cut.
And this is a big reason why you opened up this bar ever in New York, because you cut out a lot of these transactional costs.
It's insane. You have a guy comes, he spends $10,000 and he uses his credit card. Not only are you paying 5% fee on that, but he has 90 days to come back and say, oh, I was drunk, I didn't actually do this. And even if we have him on camera, and even if we have everything, American Express will freeze that money for 45 days. So for a small bar like us, 45 days is for $10,000 to get locked up is huge. And even if we get that money back, that's a huge cash flow issue for us. With Bitcoin, we accept the Bitcoin, the money is in our bank account the next day.
Can you talk a little bit more about Ever? It's very unique, very cool, entrepreneur venture that you have going on in New York. How successful has it been so far? Where's it going?
So my 2 good friends from high school actually opened up the bar back in January, and I was always going there a lot, hanging out, and they said, Charlie, we really, really want to accept Bitcoin here. We see what you're doing. It's really a fun, cool thing. We want to be like an innovative bar. And I said, yeah, I've been lazy. I'm too busy with BitInstant, the foundation, this conference to really get involved in it. And they finally pushed me to do it, and we did it. And it was the biggest explosion we've ever had. And then they said, Charlie, we want you involved, take some equity, and we want you more involved in the bar. And that's how all that happens. And it's great because we have a lot of Bitcoiners come all the time. They feel a lot of Bitcoiners are, including myself, we're a little socially awkward. And when you go to a place like Ever, you feel more at home. We have the Bitcoin table in the back. Everyone comes, hangs out. We're all friends with each other. And it's a good place to hang out.
What's the demographic at Ever?
We're more of an upscale place. So, if you're wearing sneakers or a t-shirt, we won't let you in.
Huh. So you're snazzy.
Yeah, we want everyone to look good and be happy.
But you're wearing jeans right now.
I know, whatever. These are dark jeans. Leave me alone.
All right. Well, you're also the vice chairman of the Bitcoin Foundation. Can you talk a little bit more about your initiatives and what's on the table, what's the most important issues you're pushing right now in the foundation?
So there are 2 reasons. When I met Gavin in Austria, actually, we were both in Austria at the same time about 2 years ago, I said, Gavin, we need a system or a way to take all these Bitcoin startups and pool our resources together, pool our money together, create big marketing budgets, do a conference. We need innovation. We need to be able to sit in a room together and all work together, even though some of us are competitors. And he said, well, there's this idea to start a Bitcoin foundation, and some people have been talking about it, but no one has made the jump. And you have guys like our chairman, Peter Vesves, and he came into the fold, and 5 of us got in a room in Seattle for 2 days straight, and we banged out the bylaws, and the foundation was born. And the first order of business was to do this conference, and that was what we focused on, and look how amazing it is.
And that was my interview with Charlie Shrem, the co-founder and CEO of BitInstant LLC. Up next, we're going to discuss housing. Prime Interest producer Justine and I will look at a few housing charts and discuss affordability. I will also speak with Mike Richardson from the Motley Fool to weigh in on the retail market or the rental market, and that's rapidly seeking IPOs. Then in the Daily Duel, Bob English and I will discuss more of what we saw this weekend at the Bitcoin conference. Stay tuned.
I got news for you, gang. The world is round.
That's a good one, Mac. Thank you. The news begins a deal. With more attacks on that breaking news has been happening because
Casualties in Iraq. There's my kid. Don't tell me how much time I spent helping him.
the Prime Minister tomorrow morning, 6 a.m. Eastern.
So you say no foreign aid whatsoever to watch what happens.
Coming up next, this is a Fox News Friday night.
I'm the worst journalist in the world.
The White House soup of the day, my favorite radio guy in Fort Lauderdale, it's minestrone chicken sausage.
I want you to watch what we're about to do because you've never seen anything like this. I'm telling you.
Looking for celebrity gossip and the feel-good fluff? You won't find it here. But if you're looking for relevant stories, unique perspectives, and tough questions, tune into RT.
Among economic indicators, housing statistics have attracted a lot of attention recently. Some are proclaiming that the housing recovery is lifting other sectors out of the economy. And some are wondering if now is a good time to buy a house or not. For more on how to interpret these numbers, I turn to Prime Interest producer Justine Underhill. Justine, can you tell us a little bit more about the trends that you're seeing in the housing sector?
Sure. Well, this is a graph of the Case-Shiller Home Price Index, and this is used to track changes in home prices throughout the U.S. And we have it from 2000 to today. Now, over the past 12 months, we've seen a pretty steady rise in home prices, and this is what everyone's been touting as a housing recovery. And granted, this is the biggest gains that we've seen in the index since May of 2006, and that's just comparing the slopes. But if you look a little bit closer, you can see that where we are now is fairly similar to where we were in 2010. This certainly can't be interpreted as a housing recovery. And part of the reason for the price depression that we saw right after 2010 in 2011 was because of a wave of foreclosures that hit the market at that time. And according to Realty Track, there's another wave of foreclosures in the pipeline that could depress housing prices again. Now, part of what's been driving this increase that we've seen in the past year in housing prices are the exceptionally low interest rates on mortgages, and this is thanks in part to the Federal Reserve's quantitative easing program, where they're buying $40 billion of mortgage-backed securities each month. That's not trivial, and these exceptionally low rates have made buying a house more attractive and affordable. And we can see this reflected in the next graph, which shows mortgage payments as a share of household income, and this is using median values for both. The higher the line, the less affordable the mortgage is. Now, today, someone earning about $50,000, that's median income, a homeowner earning that would be spending, using this line, about 12% of their income on mortgage payments. That's lower than it's been in the past 30 years. And you can see that even in the late 70s, early 80s, people were spending 35% of their income on their mortgage. And this was due to high interest rates. Now, before you go out to go buy a home, to really understand affordability, you have to look at the mortgage, how much housing prices are right now. And we can see that reflected in this green line right here. And this is a proportion of income. So from the late 70s to late 90s, I can see that housing prices as a share of income were 2.6 times annual income. And there's a parabolic rise in the late 90s, reaching 4 times. That means that housing prices were 4 times what a family would make in a year. And the crash brought that level down to about 3 times the amount. But housing prices would have to drop another 15% to see the same levels of affordability that we saw in the 1990s.
And why don't you think housing prices have gone back to those pre-bubble prices?
Well, one of the reasons is because of the unemployment situation. With unemployment so high, wages and incomes have been stagnant. And without an increase in wages, we're not going to see affordability coming down. And so a lot of the correction is going to have to come from housing prices dropping further.
Great. Thanks for weighing in on this, Justine. And for more on affordability of housing, people are turning to rental properties, and we're seeing a number of recent trends. Rental prices of single-family housing has recently declined or remained flat in several key markets, including California, Arizona, Nevada, and Florida. Concurrently, we're seeing signs that some of the more aggressive institutional buyers of homes are looking for the exit door. Now, I spoke earlier with Mike Richardson, who's a contributor to the Motley Fool, and I asked him to comment on the investment funds that are snapping up houses. They're forming rental companies to manage them and then spinning them off into IPOs. And I asked him if this is a sign of an underlying weakness.
Thank goodness that the financial engineering labs on Wall Street are back in business, right? Note the sarcasm. But I really had hoped that this phenomenon of let's figure out a way to make a quick buck on the investor had passed. Because, these rental IPOs that they're talking about reminds me a lot of what we saw with the collateralized mortgage obligations 5 or 6 years ago, yeah. Where, they look at, a variety of debt instruments, mortgages, slice them up, cobble them back together, and then pitch them to people as investments. And we all know how that story played out 5 years ago. So I'm hoping that this is just a fad that passes. But, if they're looking at IPOs, we just have to see what time will tell if these are going to be successful or not.
Well, do you see any differences? I mean, talk about the similarities, but are there any differences that we're seeing besides it being, owning and first renting? I
really don't, because it's all, cobbled together pieces of property. Where with the CMO market, you took one mortgage, just say it was $100,000, $20,000 went to this tranche, $30,000 went to this tranche, and it kind of seems to me that these rental IPOs are going to take the same thing, where a portion of the rental income is going to this tranche and a portion is going to another place. So, investor beware. If you decide to put your money into this, you got a lot of inherent risk involved of, what happens if this property gets sold out from under you, or if the sponsor goes bankrupt. And it really looks like it could play out the same way that we saw in 08.
And Eve Smith also pointed out that they're doing this so fast that they haven't even had the chance to collect key statistics and key indicators such as turnover, vacancy rate, the cost for making the home ready. So I think all this plays into that.
Exactly. It's really a case where people are jumping the gun before they really know what it's all about, and that breeds a phenomenon of discontent for the investor that ultimately leads to failure.
And another thing that we saw today is Wells Fargo and Citibank are halting their foreclosure process. So it looks like we have a lot of inventory still in the pipeline. Do you think this is going to set the stage for a new wave of liquidation like we saw in 2008?
That's a good question. One of the things that people have looked at in the marketplace is how healthy is the housing recovery. Is this vacancy rate? There's a glut of investment, especially in a lot of markets in the Midwest. That just hasn't been soaked up, and where some of these rental IPO groups, these trusts, could come in and soak some of that up, but then carve it out and pitch it as investment. There's still a wide range in various markets where there's not enough demand, and that's maintained the slow growth in housing. And I think it could be critical for us to look at these pieces as it relates to an overall recovery.
And rental markets are primarily a local-driven market, but having such low interest rates is now such a huge factor. Do you think this sets the stage for the rental market to becoming a national market as opposed to a local?
It's possible, and it boils down to the individual. Some people like the fact of home ownership, and at these rates where you're getting a 30-year note for under 4%, that's basically free money. If you can get it, take it. And you're where you can get $1,800 on a mortgage, conforming note, if you will. And then also you can look at saying get the same rate rental-wise for a comparable property. A lot of people will opt for that home ownership just to say, this is mine. We can do with it what we want. Other people will say, hey, you know what? I don't really want to deal with the property tax or the fixing up of what breaks, and might not want this in 5 or 6 years. We can go look for something else. So don't feel as tied down. Is it going to become more of a national phenomenon? I just don't know. That's going to be something that we have. Only time will tell.
And can you comment on also how the 30-year fixed-rate mortgage seems to be the standard, because that's what Fannie and Freddie require. And boy, is that even realistic, because people don't normally hold on to a house that long.
It is so rare that you will see anybody hold on to a 30-year note until it matures. That's really what banks don't want to take the interest rate risk by holding a 30-year note on their books. So the vehicle that's available is to sell that off to Fannie Mae or Freddie Mac. Thus, they inherit all the risk. Banks are more apt to look at something of a lesser amortization, under 15 years. They'll hold that as a portfolio loan, and that's much more. You'll see those more for folks who have more to put down on as a down payment. If somebody's coming to the table with 40% that they can put down, and are looking to buy a jumbo mortgage, something over that $650,000, $700,000 mark, then a bank will look at that, and those are normally going to be the lesser risk deals that banks will look at. So, for the average homeowner, though, they're looking for something that's going to impact their cash flow each month. They're looking at, okay, how much house can we afford, and affordability, and not take up all of our available cash flow month to month. So a 30-year note gives them that opportunity.
Right. So it looks like we're seeing a lot of new trends here in housing. Thanks so much for talking to us about this. This is Mike Richardson, contributor of The Motley Fool.
Thanks for having me.
Joining me now is Bob English.
Great to be here again, starting off the week, the Bitcoin week as we might call it.
Yeah, this weekend we attended, as I've now said probably 5 times, the first ever Bitcoin conference.
And guys, can we hold it in DC or New York next year? Just asking.
Yeah, it was a little far. Although I was a little disappointed that I couldn't bring any Bitcoins back with me, I did manage to get a coin of Nef, which is a vodka sold in Bitcoins.
And I definitely wasn't expecting to see that. But another thing I wasn't expecting to see was a couple of appearances. We were right next door to a comic book convention, and we're going to play a clip of an interview here with Andreas Antonopoulos. And guys, if we could roll it, just look at the background here.
But there's a cost there, and when you go head into regulations that were designed for big companies, you look just knowing what the regulations.
And yes, that was Spider-Man, or a miniature Spider-Man that you saw. So we're going to ask the viewers, as we're watching and rolling these interviews throughout the next couple of weeks, keep your eye on the background. You might even see a Ghostbuster or two.
Yeah, it was an interesting weekend. But, you know, just a few days before the conference, Homeland Security seized a bank account from Mt. Gox, which is one of the biggest Bitcoin exchanges, and there was definitely a cloud hanging over the conference the entire weekend that had everyone, you know, just reminding them that the government is now interested in Bitcoins, and that, you know, if they're not operating in compliance with the rules and the regulations, then your operation is going to be in jeopardy.
Right. I don't know if you would call it a cloud per se, but everybody was hyper aware that they have to be in compliance with the rules, and that was definitely one of the themes. Everybody wants to be in compliance with the rules because Bitcoins is on the way up, and everybody wants it to be perceived as legitimate, which we believe it is.
Well, but keep in mind, Mt. Gox was alleged to have lied to authorities, saying that they would not be involved in money transfers, when in fact it looks like they were.
Well, here's the problem with that. I mean, they didn't check off a box that maybe they should have, but these startups, you know, it costs a lot of money. It costs $1 million or $2 million to register as a money transfer agent, and it takes up to a year and a half, and some of these guys just don't have the time and money to do this.
But there are a lot of Bitcoin exchanges that are operating in compliance, that want to be in compliance with the government, and they were there, and they made it very clear that they want to do things right. They want to have a legitimate business, so investors, you will have an incentive to get involved.
Yes, exactly. And I think that's what we're going to see. And we're going to be talking about this again throughout the week, so we'll have more on this on the upcoming days.
Great. Thanks, Bob.
Thank you.
It's been quite the whirlwind day on Prime Interest. After catching the red eye from San Jose last night, I'll keep my goodbyes short. From foreclosure halts to shareholder shenanigans to housing market cracks to Bitcoins, I hope you enjoyed it all. Thanks for tuning in, and I'll have more Bitcoin interviews later this week. Be sure to send us your comments and follow us on Facebook.com/PrimeInterest. And from all of us at Prime Interest, I'm Perry Ann Boring, and have a great night. One of the youngest CEOs at the conference. He's one of the most successful, though. His name's Charlie Shrem, and he is the co-founder and CEO of BitInstant, which provides retail access to Bitcoins as a registered money transfer agent. He's 23 years old, and he wears a ring with his Bitcoin wallet on it. They call him Four Finger Charlie because if you chopped it off, you could get all his money. The first question I asked Charlie was just to provide a little bit of background on what BitInstant is and what it does, and here's his comments.
BitInstant is the company that allows anyone to buy Bitcoin locally. So if you have a 7-Eleven, a Walmart, a CVS, Duane Reade, at your local location, you can go into these places and actually buy Bitcoin, up to $2,000 worth every day. At the same time, if you have Bitcoin and you need for some reason to transfer it back into dollars or any currency, we can put money into your bank account within 30 minutes. So we're servicing the under $10,000 customer, where most people...
Good afternoon and welcome to Prime Interest. I'm Perry Ann Boring here in Washington, D.C., and here's the stories that I've been tracking today. We are now versed in everything Bitcoins. Although you can't touch the digital cryptocurrency, producer Bob English and I flew out to San Jose over the weekend and reached out to the 1,100 attendees and sponsors for the first major Bitcoin conference. We have several interviews from Bitcoin millionaires, investors, and developers that we'll be sharing over the next few weeks. Today, we're going to feature the CEO of BitInstant, Charlie Shrem, who will explain just how easy it is to buy Bitcoins. But moving on, those who are facing foreclosure by Wells Fargo and Citigroup might be able to breathe a little sigh of relief. The two bank giants have halted most of their foreclosure sales in several states. This is after the Federal Reserve and the Office of the Comptroller of the Currency issue new guidelines. Will this jam the housing inventory pipeline once again? We're going to discuss this and more with Mike Richardson. He's a contributor to The Motley Fool. And tomorrow's the big day at JP Morgan that will decide whether or not Jamie Dimon will be stripped of his chairmanship. But some shareholders are crying foul and have called on the Security and Exchange Commission to intervene. This is after a company called Broadridge, which is supposed to provide updates on shareholder votes, suddenly stopped reporting this information on Friday. And finally, Apple CEO Tim Cook goes to Washington tomorrow to testify over taxes. Did they pay too little? Are they gaming the system? Cook will present his own plan to Congress that will have repercussions throughout the Fortune 500 universe. I'm going to be at the hearing, and I'll bring back a full report tomorrow. But for today, let's get to what's in your prime interest. The first major Bitcoin conference took place last weekend in San Jose, California. Prime Interest producer Bob English and I, we were there, and we had the chance to interact with a wide selection of attendees, from CEOs to techies and to just simply Bitcoin enthusiasts. Over the next few weeks, we're going to feature these interviews. We have interviews from the top execs at CoinLab, TradeHill, ZipZap, Monetos, RunToGold.com, and OpenCoin, which is developing the somewhat controversial Ripple currency and payment system. Now, today we're going to feature the youngest
who are buying Bitcoin think that they need to go to these large exchanges and open up accounts and put trading orders in. You don't need to do that. When you go to Europe and you buy euros, you're either using your ATM card or you're going to one of these Travelex or change places to do that. And that's what BitInstant is poised to be.
And how widespread is BitInstant?
In the U.S., we're in 700,000 locations, but globally, we're in 11 different countries. So you can buy Bitcoin at any post office or bank in Brazil, any airport or bank in Russia. We're in the Caribbean islands, we're in Ukraine, we're in most of the Eastern European countries, and we are going to be in Australia and the UK by the end of the month.
And you also just have very exciting news that you're releasing. The Winklevoss Capital has funded you a very large sum of money. I think it was at $1.5 million.
Yep, Cameron and Tyler are great guys. I met them in Ibiza, actually, gave them my lounge chair, and that's how it all got started. One of our first investors, David Azar, was there as well, and he kind of pitched them on this whole thing where he's been in the money service business for over